And we're live. We are live. What's up, guys? It's you know me, Dad here from Bodies and Wicks. Wanted to do some breakdown of some charts. I feel like the EQ on this feels really high pitched for some reason. So I'm gonna try to like back off of it, not be so on top of it. So I hope you can hear me okay. But yeah, I just wanted to break down some charts tonight. Mainly I want to figure out what is going on with Solana, because again, I have personal interest in it. Um, Definitely want to check out Bitcoin, Ethereum. I want to check out Ripple, a couple of different things, and BNB. Maybe if I if there's somebody out there that wants me to check out something, I'll do some analysis, some smart money analysis on that as well. Again, as if you don't already know, smart money does not subscribe to any kind of retail theory kind of stuff. Um, you know, we don't trade off trend lines. No, whatever those shapes are, harmonics. That's the word, harmonics. So don't do any harmonics. Channels are out of the question. Moving averages, things like that. Just like all that stuff is just a distraction. There's one thing and one thing only, and that is price levels. In that every chart that has become institutionalized now has an algorithm in it because of the people that own most of the chart. They can push the algorithm whichever way they want, but they do leave trails, hence I guess you could say that's what they're called, behind. And that's what we study. And if we study those correctly, and we have, then you know where to enter. A good trade. Depending on what kind of trader you are, if you're going to be a long-term trader, short-term trader, you want to scalp something really quick, whatever you want to do. We can kind of hopefully hone you in on that with those PDRAs. All right, so that being said, let's just dive right into it, shall we? Why not? So again, I am going to go ahead and first take a look, and I'll probably play a little bit of the video that I released earlier, just because we can see how it got to here. I mean, there was a lot of things that were happening in this chart before it looked like this. Like I honestly thought it was gonna go. I was like, it's gonna buy again. Yeah, and I thought it was just gonna keep going up. I still think it's gonna buy, but we're gonna have to figure that out, right? I'm actually gonna take. I feel like I'm out of the way, but I still feel like I should take myself out of here. So, all right. So we're actually on Solana. And if you want to forgive me for just 5 seconds, I just gotta grab something to drink because my mouth is really, really dry. Okay, I'm back. Thank you for that. All right, I get another error from YouTube. Thank you. Awesome. Thank you, YouTube. It says YouTube is not receiving a vid to maintain smooth stream. I'm just showing you a chart. I don't know. I don't understand why it does this. I have changed so much to get this thing to work, and it worked last night. You know what? I'm gonna leave it because it kept giving me errors last night too, but it still worked. So, um, here we are at Solana, and Geez, where do I even start? Okay, so of course, after yesterday was over, and I think I even made a video about this, I was talking about how up here was the liquidity. You could see that there was a clear definition of, price tops, right? So, there being price tops, that means that there is, an area of liquidity where there's going to be areas of where people put, sell limits or buy stops, anything like that. Anything that can release liquidity into a market is where is basically what is a liquidity pool. And that was definitely a liquidity pool, if you can't tell. So all of this up here was a liquidity pool. And as you can see, once it looks like it took some time. It's actually really strange where all this comes from. So there is a fair value gap down here. What I have an extra indicator on here tonight, and it is called the crypto kill zone. So that is another part of the smart money theory, is that there are these things called kill zones, and they're basically when the most volatility happens. It is. I'm gonna lock that. All right. In Forex, there's only 3, right? And that is during the London Open, which for for me here in the United States is 2 a.m. to about 4 a.m. Yeah. And then there is New York Open, which is 6 a.m. to about 8 a.m. And then there's the actual session. Not exactly a kill zone, but still there's a lot of volatility, and the session goes up until about 10 a.m. And then around anywhere between 11 and noon is London close, and that's another kill zone. So I think you find those. I am on New York time, by the way, so the 2 a.m. one is right here, right? Then you got New York. And I can kind of set them how I want. So this would technically be the New York session, not New York Open, or the New York Kill Zone. I feel like the New York Kill Zone's earlier because that's when the setup occurs, especially in Forex. And then you got London close here. I don't even know why 12:45. That's way too late for London Kill Zone. And I'm on New York time, so if I click this, yeah, I'm on New York time, so this is a little bit later than what it should be. And then there's the first session of the day, which is it's actually happening now, I think. So it goes from 8 p.m. until 10 p.m. And at my time, it is 9:49 p.m. So I actually want to make this video quick too, because I want to get to bed early tonight. And right now I am happy. Okay, so if we look at this as a whole, of what Solana has done recently, especially yesterday was absolutely insane. That I don't even know what to say about yesterday. I just felt like I kept getting caught at like the wrong times, not paying attention at the wrong times. But I I would make some money here, and then I would lose a bit there. Make some money here, and then lose a bit there. Make some money here, and it just kept going back and forth because I couldn't figure out what was going on with Solana. Even though I had do everything ahead of time, I had thought that we would probably break liquidity first and then drop. But instead, we came down into this 1 hour fair value gap, which is this green box here. So I'm on 15 minutes. I'm going to put it on the 1 hour. And as you can see from the fair value gap, from here to here, all this over. This is where all the action happens. Inside of this gap. It's weird. And then all of a sudden there's one candle that gets outside of the gap, and that's it. And the rest happened inside of it. Yeah, it wicks out every now and then, and when it does wick out, look at it. It really wicks out. And when it wicks down to here, what it's doing is it's seeing this as support, right? This little red, or this area right here, seeing this as support, and it's wicking down into it to take out anybody that could be having a again, liquidity. This is a liquidity area. Anybody that would have some kind of um, limit set to enter the market. Buy limit, or sell stop, or sell market, or whatever you want to call them. Everybody calls them different things, or every exchange calls them something different, so whatever you want to call them. I'm used to MetaTrader 4, so I say what MetaTrader 4 usually says. But I also trade a lot on KuCoin, and theirs are a lot different. I mean, of course, they have market, but then they have stop limit, they have stop market, and they have hidden. Not really for sure what hidden is, but it sounds interesting. But, of course, you have your standard limit, too. So, again, whenever you have a very large fair value gap like this, and inside of a fair value gap, you also have multiple fair value gaps, it's kind of dangerous. Because you can never guess which one it's going to go to and bounce out of. So what fair value gaps do is they basically act as magnets. I've said this before. They'll draw price in, and then they reject price out. And they do it at specific levels. They're going to do it usually at the halfway point, at the very beginning, or at the very bottom. I know that's very vague, and but this kind of illustrates it very well. So you have your first one here, right? I can get it and show you. You have your first one here that enters the fair value gap. That's what I mean by it barely enters, and then it gets rejected out, right? And then that's in the middle of the morning. I remember setting this up and thinking, yeah, I remember it touching it. Well, it wasn't 1 in the morning. Was it 1 in the morning? Jeez. Jumps out, creates the high, right, and then comes back down in, and then here, I drew a line that went right through the middle of it. So this would be your 50% of that fair value gap. That's usually where it also rejects it. And look what it does. Rejected it immediately. And honestly, this is where I thought I was going to go. I thought I was going to reject it there. And I would just sit back, and it was just going to, go up afterwards. Because once it hits a discount level, or a level of interest, which that's what it is, and that also was a premium level, if I'm not right. I don't think it is, actually. So here's a 61%. For some reason, I had the 61% a lot closer, and I think that's because I didn't use this as the bottom. Let me unlock it. I believe I used this as the bottom. Yeah, I did. So when I used that as the bottom, these two were pretty close together. So that's why I thought I could probably get down into the 61%. I could ride it out, and everything would be okay. But what I forgot about was the mitigation block. So what a mitigation block is Right, so you have an up, down, up moment, your down moment, your last down candle. Right, that will be your mitigation candle. Now, why is that a mitigation candle? Because up here you have buyers that are stuck. Right, so this guy came up here, he bought way up here, and he's like, oh crap. And he could have bought at this, especially if they're buying, if they're the ones controlling the algorithm and pushing it around. More than likely they're buying at lower levels, like down here, like on this wick. That way they can push it up. So whenever price goes through the chart or goes through that last down candle, that block is created, and then the smart money people know, well, if I've bought in here, then what I can do is I can do it again, push it up right back into that same area, and then release my trade that I had. That way I don't lose anything. So in a nutshell, that's how it works, right? You have enough money that you can buy a lot right here to push the chart all the way up, and now you're stuck because now everybody else is selling. What do you do once it crosses? You buy enough just to get back to that point, or you put a huge chunk in, it starts buying, everybody else starts buying, and then you get to the point to where you just want to release your trade. You do, boom, you get out, you're done. So now you've made money from this point to this point, but you didn't lose anything from when you bought here and pushed it up to here. So that's how the big money people do it. All right, so and now that has come up here and came up into the mitigation block. It hits, an order, a bearish order block. Not one, but almost a second one, right? And I found those, I think, on the 5-minute chart, maybe. And then it pushes it down. And that's what I didn't expect. I was thinking it was going to go up, and I forgot about the mitigation block and it pushing it back down. And once it pushed it back down and pushed it underneath this wick, then this caused another mitigation. So now you have an up, down, or actually this is more of a breaker. You have an up, down, up moment, just like you do over here. Your last down candle is the whole entirety length of it is considered a breaker. So you do that, go all the way across, and as you can see, almost everything is underneath it because it's acting as support. That is the support. It's not some straight line that you get from, from multiple candles hitting it. It's from a candle, that has a purpose. And that purpose is because it got, it's the last down candle, went up, and then another candle drove down past it. And as soon as it drove down past it and closed down past it, you look back at this candle, and now you know this is your block. Now you know that this is your support. And look at this, all these things. And even when this drops, this yellow one right here, this is just a 5-minute fair value gap. So even in a 5-minute fair value gap, closed it up. These candles could not, for the life of them, try to get through here. Until it was the next day, basically. And then once midnight hits, that is when the algorithm starts over again. So there's your secret. That's a secret. Once midnight hits, the algorithm starts over again. And then guess what? Right after midnight, boom, goes up. So the algorithm stops and it takes off. So takes off, it gets to a high 10 o'clock in the morning. It gets to its high. I wish I would have known that earlier in the day. I wish I would have looked at it earlier in the day. But now I'm paying very, very close attention to it because I'm trying to figure out how much I want to sell and how much I want to keep, because I'm still in favor of it going up, but I'm still not sure. So I don't want to like sell 75% of it and then I'll go up and I'd be like, crap. And then I don't want to sell 25% of it and then it all go down and then me also be like, crap. So I'm in like a kind of a conundrum, but I still think it's going to go up. Right now, whenever it came down, it made its high, broke the liquidity here. You can see it spiked right through it, came back down and closed, and then actually moved down from there. And because that was the trick. That was the trick to try to get people to sell, is that right there. Right? You get this high. And then so once you get near that high, everybody's thinking sell. That is your support, right? So it spikes through it. It takes all the liquidity with it. And then everybody else is selling and they think it's going to sell. And it sells down to about here and then boom, goes right back up. And it takes everybody else out with them. So if you're in that retail frame of mind of, sell it, double highs, these are the things you got to look for to realize that you're probably going to get screwed over. You're gonna you're gonna be the one left-handed holding the bag. It's because you have this mindset of retail trading that people, I don't even know who wrote these books or whatever, or made all this stuff up, but there's no narrative to retail trading. Trading a triangle, for example. Let's just make an example out of something and try to do try to make sense out of it with retail, because we can't. And then but you can with smart money, because smart money is exactly what's happening. Like I said, these blocks, these mitigation blocks, mitigation and breaker blocks are priorities over, not really priorities, but they will be the number one thing over everything. And that's why these candles can't get into this block or get above it. It's because of this breaker / mitigation block. It's just it's too hard for it to reach through. I'm trying to think of a good retail thing to apply to this to see if we can't try to make sense out of it, and I can't. Because I can't really see anything that would be a retail type thing. I guess, okay. Maybe we can do a test for tomorrow. How about that? All right, so we have H trend line drawn down, right? So this would be kind of like a triangle type deal. Retail theory would be it's going to continue trading inside of this triangle until it finally breaks out of the triangle, right? And then the point is to retest the triangle and then buy from that point, right? So we'll test to see if that theory happens, and it might, but more than likely it's going to be something from the actual smart money theory that's going to be affecting that, not necessarily the retail theory. And then I'll walk through the retail theory for it. But right now, this thing can't seem to. I mean, geez, it looks like it wants to go down. It's got a 1 hour fair value gap. Actually, let's get in really close to this because this thing was really interesting. So you have a 1 hour fair value gap here, a 1 hour fair value gap here. Here's a 15-minute one. It jumps down, it breaks down into it, of course, gets down almost to the bottom. It gets rejected, right? Fair value gaps always reject things. In a 15-minute world, this would have been, well, you know what? It's this right here. And that's your last up candle. So you have a down, up, down moment. And so now you have, and then it breaks through it, right? Down, up, down moment, and then it just shoots right through it. So now another mitigation / breaker is created. So now that is your support. So this thing takes off, hits the fair value gap, but what does it do? Automatically rejects it. And this was moving fast. This thing came up in right up to it, moved. It just watch the video. Just watch the actual video that I posted before this, and you'll see every single movement that happened. Because I was trying to call it as it happened, and I couldn't. It was it was interesting. It felt like it was a little bit more advanced than what it should be. Because then this took off, right? And I'm still waiting on for it to hit this 1 hour fair value gap. It still hasn't hit this. And I don't know why. Because this would have been the target, I would have thought. It would have been going for this. Especially with such a bullish, and the way the whole structure has been bullish. It should have went bullish, came down, and it did. It did hit. You can see it with this line. That's why I also left this line here. It's right in the middle of the fair value gap. It come down. I thought it would come down, at least touch it, or maybe get halfway, and then turn around and go back up. Insert here, and then maybe start retracing backwards. But it didn't. It came down. It hit the bull shorter block. Bull shorter block comes up about halfway and then comes back down. And I thought this was okay. I was like, all right, what they're doing is they're rolling out a slow play for a buy. They're trying to trap sellers right now into selling. That way it can eventually turn up and start buying again. But as you can see from yesterday, that didn't happen until late. Well, I mean, yesterday was kind of weird. It was the day before that it just bought the entire day. It buys one more time. It has just one more huge buy. And then it slowly goes down. and then it consolidates, and then boom, takes off. And it took off last night in the middle of the night, and now I feel like we're doing that same thing. We're back in that same cycle. So consolidation, manipulation, and expansion. And wow, it just pushed through the bottom of the 1 hour fair value gap. We are now below $70. Hold on 1 second. This is a bad area to be in. Okay, so let's look to the left. So if we look to the left, we see the first bullish order block. And I think that could be what's stopping it. Because, a fair value gap is nothing but either all bullish or all bearish pressure. Not even pressure, just candles. So it's either all buying or all selling. So that whole area was all buying up until this point. And now that it's hit the bearish order block, or the bullish order block, I should say, it looks like it has turned around. But it may just be a very, very short-lived moment. I am not 100% sure, but we will see. See, it closed inside of the fair value gap box, but it's still going down. but then it hits the bearish order block and takes off again. Hold on, I'm honestly trying to figure out what to do with Solana here on my screen. Okay, let's actually move to something else. I think I figured it out, and I think I'm done with it. I am done with this mess. Because it's been too hard to figure out. The thing is that I don't want it to end up being like one of those Filecoin moments, you know, and me miss out on like the best part. But then again, this thing with Solana, it was kind of like my baby. It's one of those things where I just had a few coins, you know, and got a couple more, whenever it was really, really cheap, and now it's like crazy expensive, you know. So it's one of those things you want to pay attention to. But let's look at Ethereum. Ethereum is also another one that's been interesting lately. And as you can see, there's tons and tons of boxes. And all of those boxes represent fair value gaps in more ways than one. I have monthly fair value gaps, weekly fair value gaps, daily fair value gaps, 4-hour fair value gaps, and they all hit it's interesting because it all hits them at different times. But not only does it hit them at different times, it I don't know, it does something different to them each time it hits them, I guess. It it's like it gets through, or it get like just watching this area of the 1 hour fair value gap, right? It becomes such an area of support that it is the one that is, you know, pushing it up to the next level, you know, letting it get to that high, and high that we haven't seen in quite some time. And but even though it breaks down, it still comes down back to the same area, this same, you know, 1 hour area. And you know, it goes up, but then you get something like this, which is another fair value gap, and then, like I said, it acts as a magnet, and then it rejects it. So now it's starting to go the other way. And then it eventually, I mean, then you see the bullish areas of these fair value gaps, and you see, and there are smaller, bullish candles that could be upholding it, but each chart has a bias at some certain point. The bias is going to turn, and we don't know when that bias is going to turn, but it does, and you can tell it does through here. And it's just wondering what to do with Ethereum. Like when would be a good time to trade it right now? Because it gets down to the bottom of the 4 hour, right? And then it takes off, or it kind of takes off. It gets up. You have a 4 hour here, right? This big one goes from here to here. But then you also have a 4 hour inside of that as well. That's this one right here that you can see kind of brownish. This one's kind of greenish. This one's kind of brownish. Then you have a daily one that I have that's kind of bluish. But this one comes up and touches just the inside of this one, which is actually a mitigation block. So, and I put 15 minutes. So we'd actually have to get into the 15-minute to see that block. So what that is, it's a weird candle, and I know you're like, because most people would not even think that would be an area, that it would sell at, because it just sells at a random area. But it's not random. It's because of this specific candle, right? So you have this down, up, down moment, right? So you have a low, a high, and then a higher low, and then after that, it takes off. So once it takes off and breaks the plane, or breaks the high, and then closes above it, way in there, closed way above it. And so this is the next candle that this candle closes inside of it still, but it's this candle that really makes the difference, because it just takes off and then closes way above it. So now, because it has that high moment, that's what creates this mitigation, this breaker block. And so at the top of here, you also see 2 red down candles. So that would create a bullish order block. So once it crosses that plane and closes, which it does with this one, this candle comes down to that area again, it's going to be expected to be rejected. So, and as you can see, that's exactly what happens when it comes back down to here. So it comes down, rejected at the same exact spot. I mean, this one pokes through a little bit, but here rejected. But then this one finally goes down all the way through, and it goes down through the mitigation block. Why does it go down to the mitigation block? Because, as I was saying with the other one, there was somebody who had a ton of money that was able to sell hard enough to try to push the chart the other way, and everybody else began selling, and other people began selling. But then again, either the algorithm took it the other way, or some people maybe started buying and then took it the other way. Either way, these people have deep pockets, and they let that trade go the entire time until it got back down to this area. And now once it got back down to this area, those people with deep pockets, they released that trade finally. That way they didn't have to lose any money on that trade. And now they can buy. And so now this area is, it kind of has lost its use, at least to the group of traders or whoever it was that made that breaker block happen, or mitigation block happen. So they're basically they're mitigating their losses. That's why it's called a mitigation block. So now you've gotten through the mitigation block, and there's again, we're still inside of I think a daily order block as well. I think this right here is also would be considered a either mitigation or breaker. I forget which one comes first. Forgive me. Not the best of students, but they're both very, very, very similar. This one has a low, has a high point, and then a higher low. And then you have the last up candle, which is right here. And it actually has a pretty big span. So that whole candle, as you can see, it's green right there. Actually, I could probably pull this back over. Well, actually, it doesn't. It doesn't come down that far. It's actually just right here. I think maybe the hour one is like that. And 15-minute one's like this. So this is your next mitigation / breaker block, and I would think that it has to be like a it can't be very, very wicky. It has to have like a very, very full volume body, and that's why I would choose that. And I think the 1 hour one would probably have some. Actually, it wouldn't have any wicks. Well, 15 minutes. Let me see. Yeah, it could come all the way down to here with that last candle being part of it, and it would be very wicky. So I would just use that as the mitigation block. I only pulled it to here, but I can probably pull it right there. So but now that this mitigation block has been used, basically, it's kind of into, you can kind of toss it to the side. And there's a bullish order block down in here that pushes everything up. So, which means that there is a red candle, very bearish candle. And I'm guessing once I get into the 5 minute, I'm going to have to come back and find this somewhere. Yep, there it is. There's that bearish candle right in between two green candles. That is where somebody tried to push it down. That way they could get it to an area to, even just this much could be an extra $10,000 probably, something like that. In the rich man's world, just pushing it down by selling at the top here. And let me get in closer so you can see and try to understand. By selling at this top, right, to try to push it down, and then buying right here could probably make a world of a difference. Can for every dollar, of Ethereum, it could be, $3,000 or something like that. So if they're selling from 31.28, down to 31.13. Is that what it is? 31.28 to 31.13. That's 15 bucks. Let's say it's, you know, $3,000 per buck. That's night. Was that 45, so 45,000 just to make however, you know, however much this is. But then again, you know, they're still holding the sell trade until it comes back to it. And it comes back to it right here. And it gets all the way down to the bottom of it. And there they can finally release it. Because they've made their money off of it, and now they haven't lost their $45,000. But then this is what it kind of stupefies me. Is how it just goes from what it goes through the bullish order block, right? Gets rejected up into the next block, which I think is, yeah, for our fair value gap. Rejected out of that, pushed down back down to the bullish order block, and to where it gets underneath it. And now that it's underneath it, now it becomes resistance. And now that it's resistance, boom. Push down into, here is the mitigation block that I was talking about earlier. Doesn't look like it had much use, to be honest. Either that, or as soon as it got into that block, anybody who was stuck in some kind of, well, I guess they wouldn't have been stuck because they would have been stuck buying, and it already gotten way above that. So coming back down to that area, yeah, they wouldn't have been able to release the trade. So I think this was a useless mitigation block that occurred. But now what do we have? Now we have 2 4-hour fair value gaps. This one here, and then there's one right in the middle. And that's where we are right now. And we're at the 88.6% of the current wave from the bottom to the top back to here, which is where you usually see a good reaction. And we are seeing a good reaction out of that. And I believe we are seeing a good reaction out of that because of it's actually the bullish candle here. It looks like about halfway through that. Yeah, about halfway through this bullish candle. It's about exactly the 88.5%. Which is interesting. Usually it's the bearish candle that you want to measure. But just keep that in mind whenever it comes to bearish order blocks and bullish order blocks. Try to mark it, you know, about halfway through, and then see if it gets halfway through. Because generally, once it gets about halfway through, you'll see a return. You'll usually see it reject after that. But it did get up into, all right, let's see where we are. So then, there we are. We're in the 5 minutes, so it did create a 5-minute fair value gap. Again, pushes down into it, pushes out, right? Here's another 5-minute fair value gap. Pushes down into it, pushes out. But then that's when it breaks down into both of them, right? So it just cracks both of them. We have another gap here, and as you can see, it actually kind of respects that one. So if we take this, no, I gotta unlock it. I forgot that it's, oh, it is unlocked. All right, you see that cracks down into it, but then it exits almost immediately, and it doesn't close. It doesn't close inside either one, which is interesting. This one comes back into it again. Usually look at about the halfway point when it does this, because that's generally when you see the reaction. This one not so much. I mean, kind of got close to about halfway, but not exactly. Turn this off. If we go from here to here, oh, I hit the wrong button. Here to here. Yep, just a little bit more than halfway through. Get it, especially if you're doing futures, and you could short that and earn something off of that. So then now it breaks down, and we are into this 4-hour gap here. And what it's done, got down the middle. As you can see, I drew some lines in the middle to see if we'd get a reaction out of it. But then again, it's been in and out of this 4-hour fair value gap a couple. Sometimes there's that one time that it's in it that'll give it that great reaction, just like this one. Shoot, it comes up and then goes straight down, which is the balancing. So it balanced out, but then came back up into it and then just sold off. Here we've seen this bounce around inside this 4-hour fair value gap for quite some time, even reaching outside of it. And now it seems like it's pigeonholed into another 4-hour fair value gap, which is fine. And now it's gotten outside of that one. But the only thing about when it drops like this, right? Whenever it drops so suddenly like that, you get another fair value gap. And again, each time you create a fair value gap, you create something that is difficult to get through. So as you can see, even though it came down, it came back up. It wants to get through it, but the fair value gap rejects it. But it's come down and it has rebalanced, which means both of the wicks have touched, which means there's not a fair value gap in between these candles, right? So that is rebalancing. And usually once you see rebalancing, you'll usually see it turn the other way, unless it's a bearish chart. If it's a bearish chart, it'll start going down. So it seems like this is going to continue bearish. Or it'll continue bearish until the body. And then it'll turn around and be bullish. So we'll see if that's the case. And we may have to check in back on that tomorrow, or maybe in a couple minutes, who knows. But I personally thought there would be a turn of events by now. especially in Ethereum, to go higher, especially with as much bullishness as we've had, to have, all of a sudden this drop and now consolidation is not good. And now you see this purple outline here. This is a weekly fair value gap. The only thing that scares me about this is that we haven't filled this up. I mean, we have filled it up from bottom to top, but not from top to bottom. And a lot of times, that's what charts usually do, is they'll fill it up all the way to the bottom too. But I would rather just see this thing start having hope and moving upwards instead, rather than doing what it's doing. But like I said, it created that 5-minute fair value gap. It looks like you can see it was almost all the candles got here at the bottom. So it makes it look like that there is this support here. And then all of a sudden it just drops. So it looks like there was probably a lot of buy limits set in that area. Especially this area. Even though this box doesn't really represent, oh Jesus, come on. This isn't going to represent anything other than where typical traders would set their buy limits. And actually, I'm going to push this up and push this up. Because if you're thinking this is support, you'd put your buy limit here, somewhere around here. That way, you get in the trade. And then you'd put, your stop loss shortly below it. That way you don't lose too much. And then smart money realizes that and understands it. And then it pushes right below all of it. And then creates a fair value gap. That overlaps with the buying and the selling. And yeah, looks like the rebalancing didn't do too much. All right. So yeah. Even though we have hit somewhat of a bottom with Ethereum, it's also just been a lot of consolidation. I wish I could say that there is at the bottom of this, there is, oh, maybe not. Let's see here. I mean, it hasn't broke down through here yet. So that is a good thing. It hasn't broke down through here yet. If you have, a high, low, and then, or I would say very much so, high moment to low to another high moment. This last down candle is generally your support. The whole candle. Not just the very bottom of it, the whole candle will act as support. So if we draw this out, we can see it did act as support here. And of course, where it's still at is acting as support. The good thing is it hasn't drove down through, because once again, I think I said this in other charts, if it drives down straight through, then it becomes resistance. It's hard to get back up through here. So that has Ethereum for now. I would like to say that that is the, hopefully that is the bottom. But then again, we still have, you're looking at this purple outline that still is a weekly fair value gap. So if we go to a week, I mean, you can see how quickly this came up. All the way down from $1,700. It took 1, 2, 3, like a month, 3 weeks or 4 weeks to get up there. And now we're only a couple days into the new week, and we're already below the body of last week. We're not below everything from last week, but we're below the body. But we do still have this. sorry about that. Monthly fair value gap to worry about, and I think it moved. It did move. Why did it move? Give me 1 second and let me fix this. Sorry, well, actually, yeah, never mind. I thought I put it on the monthly on accident, but I didn't. I put it on the weekly. I just want to make sure this is the weekly fair value gap. Yep. Okay. All right. Let me unlock it. Okay. Locked in there. Locked in there. There we go. Okay. So that actually makes me feel a lot better. Because now we're near it. We're actually not too far from the bottom of the weekly, or the weekly fair value gap. And I would think right at that weekly fair value gap, especially if we've completely filled it in. And I think we filled it in, especially up to the top. Even higher than that, probably. Which I can't really tell because all my notes are all over it. So hold on, let me hide them really quick. So yeah, we've gotten above the weekly fair value gap. We just haven't got below yet, but we're not too far from it. So we could fill it in the opposite direction, and we could start seeing more more bullish movement out of Ethereum once it fills in that weekly fair value gap. But we'll have to see, because there was a lot coming up to that too. I mean, we're going back to earlier in the year before the craziness started happening. But then once I put all this back on, you can just see how much I just wreck the charts with everything that I can. But now that I do have the correct weekly fair value gap on here, let's get back into the 5-minute, stretch it out, and let's see how far away we are. I'm going to back that up. Okay, there we go. Okay, we're not far at all. So the bottom of it, oh wait, that's this. Where did the purple line go? purple box went missing. Hold on. Do I have to redo this? Did I accidentally delete it? This is annoying. No, it's still there. Okay. And where did it go? I am so confused right now. I got an idea though. Because this is about where we are. I'm just going to put a line through here. 29, 14, 29, 13, somewhere around there. If I put a line, that should help us find it. And nope, I see the line. I am not seeing the actual box that I... Oh, here we go. Way over here. How did that happen? Alright, so... Unlock. Was that to be... that's weird. Because that was this week. And all of that was not this week, is it? I guess we are at Thursday, so... Alright. So that gives me a bit more hope. So we'll have to see how this plays out. Because I think what's going to happen is I think it's eventually going to fill up, like I said, fill up this weekly fair value gap, and then probably start seeing bullish movement after that. Who knows? All right, let's check out this again. Why not? And I don't know what it's trying to do. I really don't. It got down to here and then decided to come up, and it's just staying inside the fair value gap. But all right, Bitcoin. Let's check out the big one of Bitcoin. It kind of has the same feel of actually, no, it doesn't. It doesn't have the same feel as Ethereum at all. Except for it does have a whole heck of a lot of fair value gaps. Here we have a weekly that we're not inside of. So that's what I like about this one, is that, you know, here we've already hit it once. We bounced out of it. Looks like we may be heading toward it again. If we hit it, hopefully we bounce out of it. Looks like I tried putting something where a fib was supposed to belong. I think I failed. There we go. That looks a little bit more like it. But the thing is that if this is the type of fib that, you know, especially that you would see in smart money, and you get that return back to the golden area to where people want to buy, which is going to be below the 61% here, right, to the 88%. Which I think this is, probably somewhere exactly where it would be. I don't think this would be it, because you have this straight up rocket, right? And so people are already buying there. Then you have a little bit of consolidation, and then you have it take off again. So yeah, this would definitely be it. So if you're looking for a place, if you're looking for anywhere to buy Bitcoin, hold off. I would personally would hold off. Until we see this thing get way down in here. Possibly 41,000s. Even though we're at 44 right now, we've been at 40. We almost got to 50. I mean, geez, we were at 46 at one point for a while, it felt like. But right now, it's actually about to hit the halfway point of that fib that I just drew. I want to see if it would come down and hit it and see if we can get a good reaction out of it or not. But you do have a 4-hour fair value gap here. It looks like that was a catalyst to it to drive out. But unfortunately, there was another fair value gap there, which was the catalyst to push it back down. So hopefully this, the weekly fair value gap would be a catalyst to push it back out. But I don't think it will be. I think it's going to suck it back in. I want to draw this out, and here's the 50% of the weekly fair value gap. Oh, why did I not do anything? The coordinates here, 42372. 0.79. So that's halfway through, but we're still not to, or are we below the golden, or are we inside the golden level at that point is the question. I think we are. Because let me get rid of that now. Let me get rid of that fib. Look, it's actually having a positive reaction right at the 50% mark. That is awesome. So hopefully, maybe we don't have to worry about this weekly fair value gap crap, because it's already ran through it. Not only as it came up through it from this side, and now it's ran through it, it's touched it. Hopefully we can stay on this side of the weekly fair value gap. But if in case it doesn't, look for, like I said, the golden zone, which it used to be down here a long, long time ago. But now it's here. And even lower. That's considered the golden pocket. And here's your weekly fair value gap. I'm even on a 4-hour chart right now. I could probably draw that in a little bit closer, but oh well. Well, it was having a positive reaction until just now. Anyways, here's those. What else do we want to look at? Actually, you know what? I gotta go to bed. I always do these videos and then I end up talking about just these three, and that's about it. But they are pretty much the main ones. I mean, at least we got through Ethereum and Bitcoin. I know everybody wants to look at those. Again, this is not where I want to get down to because there is an imbalance down here. And then we're already way up here. But then again, this is way down here in the 30s. I hope we don't see the 30s again. I hope the lowest that we'll ever see is is 40. But who knows, in this kind of environment, what we're going to see. Again, just always draw out your fair value gaps and watch your reactions. Make sure you know your premiums and your discounts, right? For sales and buys, right? Because right now we could be at a discount sell. We could be if we turned everything around. Everybody wants to talk about buying all the time, but sometimes we forget about selling. So if it comes out, I mean, if it hits this 50, and then generally what happens is it'll come out of the 50 and then come back into the 60.8 and then go down. But if we stay above the 50, then generally we're in good hands. So that's what I would like to see. As long as we can stay above this mark here, that would probably be the best thing for us. Oh, we also have a monthly fair value gap. It looks like we're inside of. Okay. Just now realizing that. But it looks like we have demolished that monthly fair value gap as it came up to the top of it. Looks like it came up here and then came back down. And whenever it came back down, probably got about to the halfway point or so, a little bit further than halfway. And that was just inside the weekly fair value gap. So we've already been inside the weekly too. Again, we've already ran through the weekly. But not only ran through, we've also pulled back some into it too. So I'm hoping that all that action with those fair value gaps has basically taken those fair value gaps out of play. Are not going to act as magnets anymore, considering they're below us. And that way we can continue moving on, especially the 4-hour one right here. I think this one is done for. This one's not though. Even though we've only ran through it once. Well, we came down into it, it bounced out, hit a 1-hour fair value gap at 4-hour, bounced out. And here's another that we need to watch out for. I'm gonna have to unlock really quick. Just pull over. Oh no. Lock that. So it'll be a fight up, but I think that's what we're going to see from Bitcoin from now on. I really don't think we're going to see prices get much lower. Ethereum, on the other hand, it's already went lower. But it's turned around and also went up. So who knows?